What about the larger view on the markets and somebody who manages oodles of money? Anish Tawakley, co-CIO Equity, ICICI Prudential Mutual Fund, Johnson, right now to try and understand or give us a sense of how are they making these money-making decisions in this quote-unquote very interesting times. Anish, thank you so much for joining in our studios. Really appreciate this.
My pleasure, Neeraj. Thanks for having me.
No, the pleasure is ours. And Anish, interesting times. They always are in the equity markets. But right now, with just the pace at which news flow seems to be developing and changing every single week, what is your overall stance on what could all of this mean for the equity market, starting off with the tariffs or with the GST reforms that have been announced?
See, both, you should see them in aggregate, right? So our view is that there is no fundamental problem in the economy, right? Fiscal deficit is in good shape, inflation is under control, current account deficit is fine, bank balance sheets are fine, corporate balance sheets are fine. So as far as the fundamentals are concerned, they're in good shape. What we need is a slight pickup in demand, right? So the only challenge is that demand needs to pick up. And I always say demand is an easy problem to solve, right? A mix of fiscal and monetary policies can lead to demand growth. And what we've seen is the RBI has already done a 50 basis point cut. That will work through the system and stimulate demand. If some GST cuts happen, that should also be stimulative to demand. So overall, our view is the economy will regain momentum. Now, how do we see tariffs in this context, right? So tariffs, you have to analyze them from two aspects. What do they do to the balance of payments? And what do they do to the overall aggregate demand in the economy? So as far as balance of payments is concerned, firstly, the current account is not in bad shape. It's anyway in good shape. There may be a slight hit you take on exports. If we think it's a temporary hit, then it's anyway not a problem. We have enough reserves to deal with any temporary issue on the balance of payments. If we think it's a longer lasting hit, a small adjustment to the rupee should bring the balance of payments where we would like it to be, right? It should lead to an adjustment to the current account. I mean, maybe we'll take a few fewer holidays, some imports will contract, and that is how the current account will adjust. So that's one side of the equation. The second is, what does it mean for total output, right? So obviously, if you have some sluggishness in exports, what you need is stronger domestic demand, right? And again, as I was saying, both domestic demand can be easily stimulated through monetary policy and fiscal policy, and a mix of both should lead to a recovery. So I'm not too worried about the tariff situation. I think actually what we need to watch is domestic home building activity, right? Frankly, if home building activity, domestic demand remains strong, which in my view relies a lot on home building activity, the economy will recover. If I may add one, interesting point on tariffs. See, actually, I sometimes recommend that we should put some export duties on stuff like pharmaceuticals and IT services. And
that's the complaint.
We can collect the tariffs rather than them. There are no supernormal profits in those industries. These industries will pass on the levy to the consumers, and the Americans will pay for it. So we can actually collect some revenue from the export duties and use it to compensate any industries that might actually be hit. There is no alternative to pharmaceuticals from India. There is no alternative to IT services from India. And these industries are not making supernormal profits, right? So if you levy a tariff, they will pass it on to the consumer.
So that is one for the playbook. Let's see how this develops. On balance, do you think the GST reset trumps the tariff impact?
See, it's very difficult to micro-model these things, right?
Broadly.
No, so there is some hit to demand from exports, and the GST is stimulative, right? Maybe it's even more stimulative than tariffs and offsets it. If it doesn't, then you give a monetary stimulus as well. So the point is, on balance, it's manageable, right? Now, whether we need to do a little more monetary action to manage it, maybe, and that would be fine.
Yeah, but markets don't seem to be entirely convinced of this story. I mean, it's taken some time for a reaction to even come to the fantastic Q1 GDP numbers. There seems to be some trepidation there. What are you looking and sensing? Are you feeling that this is an overvalued, overblown kind of market, or are you feeling more optimistic than what we are seeing reflected?
See, I don't like to give short-term views on the market nor interpret daily market movements. Frankly, one doesn't really know, right? See, what we've been saying is that while the economy is in good shape, the markets are not really cheap, right? And so in that sense, and we've had a very good run over the last 3-4 years. So if it takes a slight pause, that doesn't reflect any fundamental problem, right? It just reflects that, look, I mean, these phases happen. And
it's a phase.
Yeah. I mean, look, we have been concerned about small and mid-cap valuations, and we've been on record saying that. But we think large caps are broadly fine, and large cap is, if you take a 3-year view, you'll do okay.
The question, Anish, might be that if not due to domestic reasons, but due to global reasons, right? US markets, I mean, the question is that what steroids are the US markets on, just the way they are moving ahead. And if indeed there is a pause or a pullback, if indeed the Fed cut doesn't come in the way the market expects it to, so on and so forth, can a global growth or a global market reaction pull back markets from where they are right now and give you better entry points for the 3-year investing period as well?
That can always happen. See, the point
Is that likely?
I don't like to predict that. You know, in the short term, how does markets react? I look at what is the earnings outlook over a 2 or 3 year period.
Fair.
And if it's cheap, you buy. And if it falls, it becomes cheaper, you buy more. Right?
Okay, let's talk about that.
Yeah.
What did the Q1 numbers and the commentary make you believe about the earnings outlook for the next 18 months? And just a parallel to that, can tariffs hit the earnings outlook for H2 of the current financial?
So, as I was saying, right, if you look at the overall economy, there is a slight softness in demand, which can be easily offset. Now, I don't need to read the commentary from managements. I mean, basic economics tell me that if there is a slight weakness in demand, and if you get a monetary or a fiscal stimulus, eventually the economy recovers. Okay. Right? It's difficult to say whether it recovers in 2 months or whether it recovers in 4 months, but it always does. As long as there's no fundamental supply side issue, which there isn't. So, I'm reasonably confident that the economy will regain momentum in the next, 2 quarters or so.
Basis what? The Q1 GDP has given you that confidence? You think
I wouldn't say
inflation is under
I'm
check?
reading too much into one GDP number or whatever, but I'm just saying, look, what was my interpretation of where the economy was? No supply side problems, some weakness in demand. And if you get a stimulus, you will get demand coming back. So if you expect a demand recovery, that's what the economy needs.
So what is the GST play then that you see? Are you going for those consumption, do you think, and I know I'm not talking about markets right now or those kind of bets, but as you see it from an investment perspective, are we at the start of a rally in some of these core consumption stories, including your staples, etc., which have been quite neglected?
So staples, I'm not really super confident on, because I think the problem with staples was never the economy. The problem with staples was that these companies were over-earning, their margins were too high, and they were losing to competition. Right? So it's the competitive environment that is the barrier to volume growth, not so much the economy. So staples, I would not.
Which is not something a GST rate cut can fix.
Which would not get fixed, right? The play is more in what you would call domestic cyclicals. That's automobiles, cement, some financials, and industrial and capital goods, right? Those are the segments that react when you get a stimulus, right? Those are the segments where you see the incremental demand coming in, right? So that's where we are more positive on.
And not so much your financials, or yes?
So financials we like, but I am concerned about unsecured consumer credit, and I have been. So that part of I'm avoiding, right? So apart from the unsecured unsecured consumer credits part of the space, I think financials should be fine as well.
Got it. What about slightly expensive pockets, but which may get a tailwind out of demand optimism because of GST or otherwise? For example, I'm just picking a narrow band called EMS, right? 7, 8, 9 companies out there benefit out of a consumption boom, if any, but the valuations seem expensive. How do you approach some sectors like these?
To be honest, I don't understand the moat in these businesses, right? So I don't have big positions in them.
Okay.
See, my view is that demand growth is never enough to create value. If supply can expand in line with demand, even if demand growth is strong, there will be no supernormal profits in that industry, right? So the question, which I am not convinced of as far as EMS is concerned, is there a supply entry barrier, or is the supply like elastic enough, right? Can supply expand even faster than demand? Because if supply expands even faster than demand, you don't end up with supernormal profits.
That's true. Pricing power also. Okay, fine. Fair call. That is one. The other one is, while domestics look great, on the export side, and one of the sectors that you said, right, they're not making supernormal profits. I don't know if the tariffs will come in. It's a great thought, though, per se. But can IT, because of the valuation destruction in the last 6, 9, 12 months, what have you, become a port of call for large money to go into?
See, so there you have to take a view on the US economy, right? I agree IT has, has suffered in the last few months. But the reality is, my view is the US economy is more likely to weaken than strengthen from here, right? See, what I would argue is that last year, the US economy was very strong, right? Unemployment rate was very low, right? And I don't think, given all the turmoil that's happening, the economy strengthens from here. But I would expect the US economy to weaken, right? So I'm a bit cautious on IT.
And what about your sort of platform companies? That is one which, you know, people can't really make out if the valuations are now overdone or not. It's a consumption play. It's a discretionary consumption play. But some of those valuations and profitability have...
Which ones are you, like, what sort of platform companies are we talking about?
Okay, let's talk about Zomato. Let's
No,
talk
I won't,
about
okay,
PB
so that
Fintech.
whole space. So look, again, my framework for investing involves looking at demonstrated track record of profitability. I'm not saying that is the only right way to do it. There are smarter people than me who invest. Otherwise,
recently, there are companies that have no profits but have been zooming.
I'll let them go.
Let them go.
I'm okay with that.
No FOMO.
No FOMO. Avoiding FOMO is very important, so I'm okay.
No, so just to make that point on platform
No, I'm not
companies.
saying, see, I don't want to give you a view because I don't even spend the time to
Look at any of these.
Yeah. I mean, I want to demonstrate it. If I'm paying, so my framework is either I'm buying very cheap stuff, or if I'm paying up, then I want them to be market leaders, have a demonstrated track record of profitability and compounding potential.
Very interesting. I have one question from my end, last question from my end at least, on cement, because you did mention that as one of the pieces. The pricing behavior thus far, even in the monsoon season, has held out pretty well, much better than what people anticipated. And almost everybody is expanding capacity, right? So supply is going up. Is there a play here, or do you worry about the overcapacity at some point of time hitting the sector?
So, see, the industry has consolidated. That does not mean that there can never be a bout of spell of competitive, irrationality. But overall, if I look at it, right, I argue that cement is actually the only industry in the country that is probably under-earning. If you do the math, right, it costs $80 per ton to set up capacity, right? Capacity utilization cannot be more than 80% because of the monsoons, 80, 85. It never crosses more than 80, 85. Right? 1,000 rupees per ton of EBITDA is not excessive, right? So I have always argued in cement that the sector is under-earning, right? Leave aside what consolidation has happened. I think it's under-earning. But that does not mean there can be another period where we have a spell of intense competition and profitability falls. But if you take a longer-term view, even without paying for the the new mines that you would have to pay, right? The sector is not over-earning. The profitability, there's no supernormal profits in that sector.
Okay. And then capacity expansions don't deter you thus far, at least.
Look, so if the economy, actually, I've always held the view that we talk a lot about exports, we talk a lot about manufacturing, but ultimately home building is the most important fundamental driver of the economy. If home building happens, then manufacturing happens.
So you're liking realty?
Oh, that I'm saying home building is the driver of the overall economy. You still have to get your stocks right if you're going into some of these sectors, right? So the point is, I do think cement demand can be very healthy. In fact, I always argue that cement and power, it's a bit odd to talk about overcapacity. Those sectors should determine the rate at which the country can grow, right? I really struggle when people say we have oversupply of power. Our consumption is so low. Power should be the limiting factor to our output, right? What do we mean when we say we have surplus power, right? Similarly is the case with cement.
Right. Thank you so much for coming in today.
My pleasure. Thanks for having me.
I think some wise words said there. Look at profits and maybe let go of FOMO sometimes.
JOMO maybe.
JOMO, yeah, joy of missing out. That's the new one. FOMO replaces JOMO. Well, a lot of people in India seem to have been enjoying JOMO when it comes to Tesla. Just this numbers that have dropped on their long-awaited entry to India seems to be a bit of a downer. They have booked 600 cars so far. Since launching in mid-July. That's about how much Tesla delivers every 4 hours globally. So maybe some JOMO happening there from Indians on Tesla so far.